Hello, I'm Keith Reynolds, Chief Marketing Officer at the Accordia Group. Today, I'm joined by the Chief Executive Officer, Alex Todorovic, and Ruby Business Development Head, David Talbot. And we are talking about how investors are approaching new opportunities in carbon markets and the data management required for these investors to succeed. So David, kick us off. Why are carbon markets relevant today?
Good afternoon, Keith. Well, it's all about scale. These markets are expanding very significantly, and let me give you some context. Over the last year, governments from countries as diverse as Japan, China, South Africa, many independent European countries, and the UK have made zero carbon pledges. In addition to that, around 400 of the world's largest companies have similarly pledged to take their carbon footprints to zero at varying times between 2030 and 2050. And absent major technical breakthroughs such as carbon capture and storage or green hydrogen, until those breakthroughs occur, much of the heavy lifting is going to have to be done by carbon offset permits.
So how big is the regulatory carbon market today then?
The regulated market is primarily made up of the European Emissions Trading Scheme, which is a cap and trade scheme designed to penalize dirty power generators and industries which are thought to be more polluting. At the moment, the valuation of those markets, or at the end of last year, was about $300 million. But the price of carbon has doubled during the last year to over 60 euros a ton. So those markets are growing very, very quickly. In addition to Europe, there's activity in the same way in parts of the west coast of the US, Canada, New Zealand, and most recently, China.
And what is the regulated market? Or that is the regulated market, but what of the voluntary carbon markets?
Well, the voluntary carbon markets are more modest in scale, but they are growing quickly too. Last year, they grew about fourfold to the equivalent of 180 million tons of carbon. But there's a task force to scale the voluntary carbon markets headed up by Mark Carney, the former governor of the Bank of England. And that group has stated that if these markets are to be effective in their ambition to help getting to net zero, then they have to expand 60-fold by 2050, which is a very significant rate of growth.
That is. Which industries are the dominant buyers in these voluntary carbon credits?
In Europe, it tends to be the energy and utility companies. One very good example of an industry using these credits is the oil and gas industry. The super major oil companies are large buyers of these carbon offsets, and they attach those carbon offsets to cargoes of liquefied natural gas as they're shipped from destination countries like Qatar and Australia to markets in China, the Far East, and Europe. And that makes up about 30% of the cargoes in Europe, of the credits in Europe. In the US, about 30% of the buyers there tend to be financial-oriented companies, which tells you that there's a level of investment, speculative investment activity starting to emerge in these markets.
Fascinating. So credits can be derived from a range of defined activities. What are the most sought after credits?
Well, in Europe, that tends to be forestry and land use, whereas in North America, the predominant credits are generated from waste disposal activities.
And how fungible and tradable are these credits?
Well, that's very important. At this stage, not so very much so. They're in their infancy. These markets are best described as over the counter. Each of these contracts is individually negotiated both at the contract level and at the carbon registry level. The price transparency is poor, but significantly improving, with organizations like Ecosystems Marketplace helping to boost that price transparency.
So what needs to happen to allow vigorous secondary markets to emerge?
Well, first of all, we need to see rising corporate demand for those credits, which I think we've discussed previously there. But once that demand emerges, we also need to see standardization of the contract terms. Once those contracts are standardized, a futures market can equally well emerge. And that's the critical component to allow capital to flow from investors into these ecological projects, which are going to generate ultimately the level of offsets that the world will need.
It's a tremendous amount of data to make that happen. What role can Accordia's Ruby system play in carbon markets? And well, firstly, what is Ruby?
Thank you, Keith. Ruby is a cloud-native portfolio management platform built on advanced data integration capabilities. The advantage of Ruby as a cloud platform is that it provides not only software, but end-to-end infrastructure management, and you can do it in any cloud environment.
And what sort of data is Ruby capable of processing?
Ruby, Keith, is a cloud-based big data solution. So the architecture is ideally suited to ingesting large data sets into a series of parallel repositories that we call tuple spaces, which are then linked to the underlying security master for both liquid and private investments. We ingest multiple investment factors and combine them in a single unique instrument, which can then be analyzed and evaluated. So our big advantage is our ability to combine descriptive and fundamental financial data with alternative data streams. For example, we have recently entered into partnerships with vendors such as Owl Analytics or Just Capital in order to make it easier for our clients to bring in impact investment data into their portfolio construction process.
So Ruby is used as the primary research capacity in a primary research capacity as well as the portfolio management.
Yes, Keith, it does both. You're right. We have built Ruby to be an open and scalable investment platform for the cloud computing age. We believe that the speed of integration of traditional and alternative data sets is going to give a huge leg up to agile players who are going to be able to take opportunities in changing markets and emergence of new asset classes such as carbon credits. We offer support for all asset classes and can easily add new products such as carbon credits into traditional portfolio workflows.
Oh, fascinating. So does that mean that the system's capable of trading, settling, and reporting on a portfolio of these securities?
Yes, it is, Keith. Once our clients are ready to invest, Ruby provides a well-integrated platform providing capabilities such as trade capture, P&L monitoring, risk and valuation, compliance, internal management reporting, as well as external reporting to investors.
What a huge benefit to be able to center all that around a P&L view. How is Accordia establishing its presence in the emerging asset classes like this?
Okay, let's take a look at the voluntary carbon market space. It's a new, innovative, emerging space without established technology solutions. So we have done some pioneering work with our clients and show daily commitment to this exciting new space. We have built a carbon platform that includes 3 key steps as investment managers are considering this asset class. So first, we provide advanced data collection and research capabilities, having integrated the world's largest carbon offset registries. This entails collection, normalization, and update of massive amount of data. Second, we can then seamlessly provide investment selection and valuation criteria that are specific to each investor. So our platform supports inclusion of custom quantitative and qualitative models, which can then be used to express unique views in portfolio construction and selection. Third, we provide your typical post-trade portfolio management capabilities, which allows investors to trade this new asset class, carbon credits, either as a standalone asset class or in addition to your traditional portfolios. So Keith, under one roof, in one platform, we can take you from research to investment to exit, and we can do that, get you up and running very quickly in a cloud environment of your choice.
Well, that's fascinating, and it's a real insight into how investors can approach new investment opportunities like these carbon markets and really make data management a competitive advantage. David, thank you so much for putting together this market perspective on this emerging space, and Alex for providing insight as to how data management and a system like Ruby can provide investors with a strategic competitive advantage. If you're interested in learning more, you can scan the QR code up here or go to www.accordia-group.com. We'd love to hear from you, and please send us questions. We're very interested in helping to explore this with our customers. Thank you very much for joining us.
Thank you, Keith. Thank you, David.
Thanks, Keith.
Thanks, guys. And thanks for joining us.